Hello and welcome to Flagstaff TV. Today we are joined by Paul Griffiths, CEO of Predator Oil and Gas. Paul, thank you very much for joining us today.
Good afternoon, Catherine.
Paul, what's next after the MOU-5 well results in Morocco?
So MOU established and satisfied all our pre-geological concepts in terms of the Jurassic prospectivity. We hit all the horizons we expected to hit, but what we didn't expect to hit was some salt. So that was something that we could not see on the 2D seismic, and therefore made a subtle difference to where we were on the structure. Then I guess, as you can imagine, the well was only drilled less than sort of 10, finished less than 12 days ago. So we've had time just to have a review of the results in terms of the impact on what our pre-drill prospectivity was. And we're happy that the scope of what we found to date allows us to create another location 12 kilometers to the north, which was one of our original 3 locations. However, there's quite a bit of work to be done before we can sort of firm up another location, and I'm talking about months and not days or weeks. We have studies to do on the well. We've got very good cutting samples, which allows us to give us information on source rocks and maturity, for example. And we also have to retie our limited 2D seismic between MOU4 and MOU5, because we now believe the MOU4 section, part of what was dated as a younger section, is in fact an older section. So all these things have to be done. But we're pretty confident that with the gravity mag desktop work we're going to do, magnetic profiling, plus the satellite remote sensing work, which will identify the fractures, which could be the source of helium, for example, then we have basically a package to take it to the next stage. But the next stage is going to be farm out for 3D seismic and potentially a well if we firm up this well location. We've done our bit. We've de-risked the prospectivity. We believe now is the time to retrench, regroup in terms of the Jurassic prospect, and bringing in a bigger partner who can do all the good things to bring it to the next stage of, say, development, not in a gas development sense, but next stage of development of the project. And I guess, our preference is a farm out process, and I wouldn't have said that a year ago necessarily, but the market's changed, the whole industry has changed. We can't keep going it alone indefinitely, shouldering the burden of doing all the high risk exploration appraisal work that you normally expect a bigger company to do. So we've done our bit to de-risk this, and the next stage is a bigger partner.
Paul, can you tell us a little bit more about MOU-3?
So MOU-3 has always been on the agenda, as everybody knows, for rigorous testing. But our focus right now, the next part of the program, will be to test the shallow higher pressure gas, which occurs at about 300, just above 350 meters. So it's shallow, but it's overpressured. When we drilled through that section, we didn't expect it to be there. So it was drilled underbalanced, and lo and behold, the gas flowed into the well. So we parked that for some time to focus on the deeper gas potential, simply because at that time, the perception was for us that we needed to grow the gas project to a scale that would be suitable for an international player to come in, given that we were so close to the Margate pipeline, the gas market, the CNG gas market, etc. But of course, again, that has changed with the changing nature of the oil and gas sector. So we can refocus now on what was always the easy option, but perhaps not, as exciting in terms of the resources. We have about 21 BCF P50 for this shallow gas play. But in the current climate, that's worth quite a lot of money if you can get it to the next stage of an exploitation concession, which could be possible this year. So in a success case that we flow gas from the well, which we're confident that we will in the shallow section. But then you have to decide, well, what next after applying for an exploitation concession? So our favoured option now in this market, and knowing what we know about the industry in general now, is that we would like to at least bring in a local partner who needs gas, who wants to distribute gas, and part monetize that asset and bring cash back into the company. So that would be the sensible route forward to try and monetize that shallow gas.
Regarding yesterday's announcement, can you explain what role Trinidad is playing with regard to the company's portfolio of assets?
So Trinidad has always been part of the portfolio since IPO days in 2018. And what we really announced yesterday was kind of the combination of a lot of work that we've been doing over the last couple of years. And that effectively means we have to understand that Trinidad is low risk. Oil has been produced there for 100 years. So unlike Morocco, the risk isn't in finding and producing something. The risk is more associated with commercial risks and well deliverabilities, because these are older fields. They tend to produce at very low rates. Petroleum profit tax is very high in Trinidad, and operating costs are high if you're only producing a small volume of oil. So the challenge for all public companies in Trinidad has been effectively to make significant money out of the asset to be reflected in share price or to give value back to shareholders. So what we have focused on is basically acquiring assets and building up a catalogue, if you like, or portfolio of wells that have the ability, geologically at least, to deliver at higher rates, even before you look at well stimulation. And then we've also developed agreements and signed up agreements for new technologies, such as the patented thermochemical wax treatment, which never before been applied in Trinidad. We've worked out agreements for cutting our costs, our field operating costs, as you saw in yesterday's announcement, which means that we can focus our resources on the high value wells and have all the lower value wells that are still churning out production income looked after, so that we're not paying operating costs for those wells, field operating costs. And lastly, the concept of acquisitions means that we're adding, more and more wells at a very low price to our portfolio. The more wells you have, the greater the chance of success of a large percentage of those wells being stimulated or being reworked over to produce more oil than what has traditionally been produced from them. And all that means, in combination, more profit per barrel of oil. And that's always been our aim. So yes, it's taken a long time, but there's no point in going in and working over and even drilling wells unless you can turn them into a very cash positive project.
And Paul, why have you not discussed Trinidad over the past 6 months relative to Morocco?
I thought about this for a while, and then I guess the answer to that, which is fair to say that as a board, we've always put Morocco first because of the high impact, the potential high impact, high risk, but higher impact. That hasn't changed in terms of, understanding the potential of Morocco, but I think we probably downplayed Trinidad whilst we were building up this portfolio of assets. Simply another reason, it's not a lame excuse, but another reason is the more exciting you make Trinidad, the higher cost of the acquisitions. So we've been very fortunate to do our acquisitions at a very competitive price compared to assets that are being sold right now over the last 6 months in Trinidad, which allows us to get a competitive advantage. So if we wave our arms and say too much too soon, oh, we're going to do wax treatment, we're going to do this, we're going to do that, we did enough to get people interested, but not enough to shoot ourselves in the foot, so that we were effectively buying assets at an elevated price. So we think we've done very well on our assets. I also think that focusing on Trinidad is not initially exciting for shareholders in the climate that existed a couple of years ago. Well, that climate has changed completely. So what is exciting for us now is cash revenue, and we have to focus on that. You have to change strategy where you can. You have to have the assets available to you to be able to move from one asset to another asset. So we don't have any reservations about now being more upfront about Trinidad, because we can be in a position to do that now, whereas we weren't over the last 6 months.
Are you confident that the company has sufficient funds to carry out its planned activities? And if so, can you give us reasons why?
This is always the fundamental question in the current market. So we did what we had to do in November and January, which was we didn't have to do it, but we took the 12-month view that with the possible changes, political changes in January in the United States, that there may be a lot, might have been a lot of turbulence in the market going forward. So the old adage is, if there's some funding on the table, you take it off the table, because sure as hell it won't be there the next day. So it was more of a long-term view to make sure that if the market descended into turmoil and chaos, then we still had that cash available to us to underpin everything we're doing and in terms of generating production revenues. So I think we've been proved right, to be honest. What's happened over the last, it doesn't seem that long, but it's only 2 months. But the whole world order has been turned upside down. So, and you see that in the markets today and for a little bit of time to come. So that will eventually, I won't say peter out, but eventually people will come to terms with the new world order and the cycle will begin again. But we've also taken the precaution last year of cutting our overheads. We cut certain overheads within the company that streamlined the company. I made sure that the money we did spend was going to focus on delivering what we had to deliver, going forward. And we've also been very cost conscious on budget. So, for example, MOU5 was drilled very, very efficiently, very well, and we managed to save a significant amount of the budget on that. So we've also made sure that the work program going forward for the next 12 months is very specific and is also funded under our existing cash flow. And we've made no allowances whatsoever in that cash flow for a single cent as yet of production revenue from Trinidad, whereas we know we're already going to be starting next month revenues, and they'll ramp up during the year. And lastly, we still maintain a debt-free status. So if people question or wish to question how the company is run or where the company is going, well, they have a choice. They either invest in the current management and the current direction of the company, or they choose to go elsewhere, or they choose to change the management or the directors. But at the end of the day, this company has no going concern issue, has no debt, is still well funded, is still very much 100% of all its projects. All its projects are live and progressing. And the board, and our shareholders should take pride in that. And they should be pleased, at least, that we are very much in the game, very much there for the turnaround. And we're one of the few companies who are in that position at present. So that's what this management and this board delivers. If you don't like it, well, the choice is yours, and I'm very happy. I would be very relieved tomorrow to go and do something else if someone would buy my 46 million shares. So I'm very happy about that. So don't think for one instance that I'm wedded to this company or the direction of the company. I'm wedded to the fact that the company needs to be successful. And in my view, we are successful. We're still here. We're fighting our corner. And we practiced financial prudence and due diligence at every step of the way. And if that's the criticism of the board or the company, well, then why are we in this business?
Paul, finally for today, how will overall company strategy be adopted to address the current evolution of the oil and gas sector?
So, it's sometimes you get into a fixed strategy, particularly in oil and gas. Oil and gas goes in cycles. So Our initial strategy 3 or 4 years ago was to build up Morocco, sell it to an international player. And in order to do that, you have to spend quite a bit of money, and you also have to have quantums of success that are orders of magnitude greater than kind of the natural expectation if you want to move quickly. In the, I'd say the old days, that's terrible, but in the days of a few years ago, Morocco would have been farmed out by now. A major would have been in there. They would be seen the potential of being close to the Maghreb pipeline. They would seen the potential of drilling wells for $3 million. They would see the Jurassic gas potential, the biogenic gas potential, the vast amount of acreage, the incredible fiscal terms. All these would have been tick the boxes for a major for a new country entry. Yeah, well, those days are gone at present because the majors are consolidating. The projects are LNG and much bigger projects, so they're not available to sell to. The small caps and the mid caps in particular have been strangled for liquidity and funds, so they're not, farming in or taking assets. So you just have to take a back seat, consolidate what you have, and wait for that chance that something comes along or somebody comes along out of the blue from a different jurisdiction and says, not Europe, but maybe Middle East, for example, and said, well, yeah, we see Morocco as a great area to invest in the infrastructure, etc. And with the World Cup coming up, being co-shared by Morocco in 2030, well, that's great, publicity for us to be in Morocco ahead of that time. So you have to look a little bit out of the box. And the other thing you have to do is to retrench and say, well, who's likely to buy this? If it's not the majors, well, it's the local players. And the local players in Morocco want to market gas. They want to be in the gas marketing business. They want to find gas. They don't want to find gas. They want us to find gas. So there's always going to be a market there. So we readjust to that market. So we think a little bit smaller with the MOU3 shallow perforations, because in-country entities are not going to have hundreds of millions of dollars or euros or dirhams to buy assets, but they will be able to access private equity, as many of them do. And similarly in Trinidad, we're working there on the basis that Trinidad is one of those countries, unlike Europe, where there is an inflow of money, particularly from Dubai and the Middle East, to buy assets. So again, that's an area that we can create our strategy around, where people understand our business, like what we're doing, like the assets that we have, and value them. We have to accept that the market is where it is and will not give us a single cent of value for enterprise, running a good business, or having assets or acreage. If you think of the acreage we have and the size of the acreage we have, it's like having 5 or 6 big patches of land with planning permission for development, etc. So that's the value that people miss in the market, the value of the acreage. It takes 2 years to get this acreage. Similarly, in Trinidad, it's taken 3 years to build up that portfolio. Anybody else coming in tomorrow couldn't do it in less than that time. So there is a value in that. And that is the value we have to get across to the people who understand value. It's not a market value, because the market doesn't understand that value. And I don't blame them for that. That's not their expertise. And the cycle will change where certain assets become valuable, just like property goes up, property goes down. So we're not waiting for that. We're working on the parties that we know are interested in the assets and interested in what we're doing.
Well, thank you very much for your time today.
Perfect. Thank you. Thank you for giving me the time.
And thank you for watching Flagstaff TV.